Welcome back, everybody. Another Distributed with Ted Magazine podcast. I am Scott Costa, the publisher of Ted Magazine. Thanks for hopping on this one in our digital edition. I really appreciate it. We've got an important topic, a topic that's been going around for a couple of years now. It certainly continues to grow, and that's mergers and acquisitions and the activity that's happened, in our supply chain and around the world, really. And David Clark, he's a director at ArkMalibu. He was in our recent digital edition of the magazine where we focused on mergers and acquisitions and gave us some great insight. And I want to get a little more deeper into the topic as M&A activity continues to grow. So, David, first of all, thanks for hopping on the podcast with me. I really do appreciate it. Give me a little background of you at ArkMalibu. When you started, what you're doing, what ArkMalibu does. Kind of get us started into what's been going on.
Absolutely, Scott. Now, first off, just thank you for bringing me on the podcast. We had a lot of fun doing the article a few months back with Dan Dungan, who's a senior advisor with us. But really appreciate you having me on. So, background: ArkMalibu is a sell-side only M&A firm based out of Cincinnati, Ohio. So what that means is we do not represent buyers. We do not represent private equity players. The only thing we do is help family-owned, founder-led businesses sell their companies. We think that gives us an unconflicted viewpoint in the marketplace to make sure we're not just selling business owners, companies to our favorite buyers that we're also doing business with. So it was actually founded back in 2015 by Rene Robichaud and Peter Kubasik. I joined in 2020, right in the middle of COVID. It's funny, I actually joined, Rene Robichaud called me on what was supposed to be my rehearsal dinner for my wedding, but thankfully we pushed it back due to COVID to August, so I was able to come in and interview, and the rest is history. So I've been with the company for 4 years and seen a lot of different happenings, not just in electrical distribution, but across the M&A landscape. And it's been fun to watch what the M&A landscape has done, especially in electrical distribution during COVID and then immediately thereafter. So, yeah, it's been fun.
Great. So, I think that I'm going to take a narrow view. Let's not take a narrow view is kind of what I'm saying. We'll take kind of a wider view. Again, we live in a world today where, major oil companies are acquiring major oil companies, and two of the biggest grocery store companies are merging, and U.S. Steel, which was an iconic, American business, is being acquired currently. It's not just electrical distribution. It's happening everywhere. And I don't want to make it seem like, oh gosh, let's not be so narrow with that. But give me an idea of what was going on when you started at ArkMalibu 4 years ago, in terms of general thought patterns, in terms of mergers and acquisitions, and has that changed to where we are today in 2024?
Yeah, I'll start broad and get a little bit more narrow into electrical distribution. But yeah, when I joined it was an interesting time. I did buy-side work in Chicago for a couple years, but I had never worked on the sell side at an investment bank, and I joined right in the middle of COVID. So at that time, we were scrambling to figure out if there were deals to be done, right? The world was kind of going downhill. We didn't know where the M&A environment was going to be heading over the next 12, 24 months. And so we actually, we were doing a lot of work for business owners, just putting the lipstick on those businesses to make sure that they were ready to sell when the time was right. And I use the lipstick term because we were talking about it right before, right, Scott? So we were getting people ready to sell more often than not, and having a lot of long-term conversations in 2020 because they didn't know if that was the right time to sell. And within electrical distribution, it's been kind of fun to watch. 2020, everybody discounted that year because it was middle of COVID. And then 2021, oh, well, it's just a bounce back from COVID. And then 2022, you say, oh, well, there's been inflation in these earnings, with supply chain disruption immediately following COVID. And then 2023 was kind of a reversion back to the norm. And I'm actually interested to see now in 2024, it should be a new normal, right? It should be, okay, earnings have normalized, inflation has stabilized. Now that we're into a new normal in 2024, what does that look like? And we could probably use that as the new barometer stick moving forward for number of deals and valuation, et cetera. So Yeah, in electrical distribution, it's an interesting little niche market. But largely, when you look at the macro economy with just the broader M&A market, and then you narrow it down into distribution in general, and then you get down in electrical distribution, a lot of the same trends on valuation, number of deals, et cetera, ring true to where the electrical distribution market certainly has its intricacies, but it largely moves in line with the broader M&A economy, which is nice.
So it's not just us. It's happening in other
Happen
industries
everywhere.
and other supply chains. And again, so now you're bringing up sort of again the new normal. I mean, do you really envision that there's such a thing as normal? Again, we've had, I don't count them because I think it's just kind of weird, but we've had a bunch of mergers and acquisitions in 2024, and we're only at, March, for crying out loud. So,
Yeah.
what is normal? I mean, can you really justify what normal could possibly be?
Yeah, that's a good point. So I guess the way that I view normal is just seeing the deal. So for example, in 2023, number of deals went down about 18% electrical distribution, whereas the broader economy was down about 18%. Valuations actually ticked up in 2023 because less deals happen, and typically that means the good companies sold. More good companies sold than the tier 3, tier 4 assets. So in M&A, that's a favorable business mix, but we won't go down to those details. But if you look at the number of deals that get done compared to just the number of companies in the industry, this is a consolidating industry compared to most. So that is a good point. Yeah, I don't think we can ever really define normal because, boy, when you have, dozens of deals a year in an industry that, that there's an EW top 150 list, right? That has everybody over 25 million in revenues, most people above 25 million in revenues. Yeah, it is certainly a consolidating industry compared to most that we deal with. So no, that's a good point, Scott. You can't really define what normal is, because I do think 2024 is going to see a pretty big uptick in deals compared to 23, maybe even compared to 22. But yeah, I think ultimately it is so unique to every business owner when the right time is to sell. And it shouldn't be about multiple, on your EBITDA, or if you're selling at peak levels or not. These buyers are so sophisticated in this industry that they're able to normalize it anyway. So, I always tell business owners, deciding when to potentially have an exit opportunity or pursue a sale process should be based on your own individual wants and desires. You ready to retire? Is there not somebody that's ready to take over the business? What is best for your company in particular? Because I bet you for every one deal we take on in electrical distribution, there's 3 or 4 more where we talk to business owners and it's just not the right time. So it's very unique depending on your own specific situation.
Okay, so let's talk about the lipstick, which we talked about before we hit the record button. What are you seeing now in terms of, and again, maybe you need to compare it to 4 years ago. Has the time come when there's a lot of, again, sort of smaller family-owned distributors are saying it's time to, put on my best party dress and get the makeup on and look as pretty as I can because I'm interested in selling? Or do you think it's the other way around where some of the bigger, national distributors are saying, hey, it's time for me to, I'm going to come knocking, just because I'm interested in what you have to offer? I mean, what are you seeing more of, interest on the buyer side or the seller side right now?
I'd say all the above, Scott. But I think the one thing that has changed from 2020 to 2024 in electrical distribution, I'd say the top thing that's changed is these buyers are becoming much more sophisticated and hiring full-blown teams to run M&A processes for them. I mean, it's so seeing some of these buyers have 2, 3, 4 people on their staff that is only focused on acquiring like-minded businesses. They're knocking on people's doors every single day. So I'd say yes and yes. Now, sellers, the good news is for most sellers, is the lipstick's already been applied per se because inflation did it for them.
Yeah.
So they've got some pretty high earnings right now, certainly in 21 and 22. And really, we've been telling people if you were flat in 23 on an earnings perspective, you had a good year. So the lipstick's already kind of been built in. And another really good thing about this industry, as I mentioned earlier, is you can put lipstick on, but these buyers are really good at getting down to the nuts and bolts and determining what a normalized level of earnings looks like, to where, and they rationalize the multiples accordingly too, to where, you know, the amount of prep work really is hiring the right team, not just investment bankers. It's getting the right accounting firm, getting the right lawyers in place, wealth advisors, to make sure that you are well prepared to make the most of your sale.
And then, so get me into some of more of the reasons. First, let's start with, you know, just what I call unprofessionally, I suppose, the cost of doing business, which is, you know, the association and the magazine is pushing this whole connected business for the future. And we hear about AI, and we hear you should have a chief technology officer and a chief information officer and a chief data officer. And, you know, these things cost money. And all of a sudden, again, you start looking at the expense of being a distributor in 2030 and beyond. And you start to wonder, I mean, are you seeing those kinds of things again as distributors are approaching you about, you know, again, what's out there? What are my opportunities?
Absolutely. Yeah. I think ultimately the dynamic is starting to shift a little bit to where some of the earlier conversations that we had with distributors, back in 2020 and 2021, it was all surrounding, do I have a succession plan in place? Do I want to sell? This has always been. And when you're getting into 24, the conversations are more so centering around exactly what you're talking about. Man, I'm going to have to invest in technology, artificial intelligence, automation across my supply chain, in order to keep up with not just the large national chains, but the other regional family-owned businesses, right?
Yeah.
I mean, some of our recent clients have invested in technology in ways that, you know, they're teaching some of the buyers some things. So in order to keep up with competition over the next 10 years, for sure, you're going to have to, there's a lot of investment that needs to be taking place. And now you can tell some of the conversations we're having with distributors is, are they ready to do that? And do they want to do that? Or should they just go from, I was talking to a distributor yesterday, talking about how the family needs to understand that they're business rich today. They eventually need to be cash rich by selling the business, right? So yes, absolutely. There's a lot of disruption going on. You should see, like I mentioned, a lot of these, people in the $50 to $250 million revenue range annually, and some of the investments they're putting into technology, much less some of these nationals. When I'm looking at videos of some of these buyers' automated distribution houses, I'm like, oh my gosh, that is incredible. And ultimately, a major reason why buyers are so hungry to consolidate this industry is they cannot replicate the relationships that a family-owned business has built over decades, right? It's going to take a long time in order for them to put a branch there and start replicating those relationships. But eventually, if they're starting to bring cost savings and technology to those customers that you just weren't able to put in place because you weren't able to invest in it, I do think that the pressure to sell is going to go up over the next 10 years for sure.
That's a good point. I wanted to bring that up. I mean, we're seeing recent acquisitions where the company that is acquired, the current leadership is actually staying in place and still running the X number of branches that they had. So it's not like a complete takeover. So, you know, X bought Y, and now X has basically sent everybody at Y home, and they're just going to, you know, the X team is going to bring in its new managers, its new management team. I'm hearing a lot more of, yeah, but the people who are running Y are going to continue to run Y. Does that seem to be what you were talking about, part of the strategy?
I tell you what, I think that is the most common misconception from sellers, is that they sell their business and all their people need to start being nervous about their jobs. I am constantly talking to our clients about, listen, the buyer really does not want to mess this up. Really, 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 truly does not want to mess this up. So I have constantly seen from our clients in distribution, out of distribution, but certainly in distribution, where the amount of opportunities that their people get from having the expertise of some of these buyers putting wind at their sails, it's something that the current business owners just couldn't do with the resources at their disposal.
Mm-hmm.
Then also the buyers, they don't know the specific market. That's why they're acquiring you, right? Because they're probably not there right now. And if they are, they haven't been winning there for whatever reason. So they really lean hard on the management team, probably even more so than what the management team is used to from the family-owned businesses to grow. And a lot of people really thrive in that. And the amount of opportunities that these sellers, employees get post-transaction is something that they very rarely take into account. So yes, I think it's a big-time misconception that your sales team, even your CFO, accounting team, IT is going to get replaced. That's just not the case. We haven't seen that.
Yeah, I'm hearing more about that too. And then what about the other, kind of some other pieces to it? Hey, we're acquiring so-and-so company because they're in a buying group. We're acquiring so-and-so company because they have a product line, that we want to be involved in.
Yep.
So don't get me wrong. I'm not trying to say that an important part isn't, hey, we need to get into an area that we're not in, and we don't want to build branches, and we don't want to, reestablish and invest that way. We'll invest in companies that are already established in those areas. But what about some of those other intrinsic things that are out there, buying groups and product lines and things like that they want to be involved in? Are you hearing some of that? What do you hear in terms of that?
All are important, and they're all, when we send out a teaser and eventually a sim, those are all the questions that the buyers ask immediately. Is what buying group are they in?
Yeah.
Let's see, who are their major suppliers that they deal with? How long have those relationships been in place? Those are all very important. But when these buyers are coming in, largely, Scott, when you talk about buying groups in particular, there's two schools of thought. One is the reason why these buyers are so hungry is you acquire the business, you roll them into their own, internal buying group, and you drop 2, 3, 4 points in the bottom line overnight. That's a huge reason why these buyers have been so hungry. But we're starting to see more often, Scott, one way that a buyer can differentiate itself in some of our processes is by saying, we're going to keep you in your buying group. These family-owned businesses for decades have been relying on some of these buying groups, not just for discounts or whatever it may be, but that's their network, right? They go to find best practices and network with the industry, figure out what other distributors are doing. And oftentimes from a cultural perspective, some of these buyers say, hey, we're going to keep you in that buying group. That goes a long way and end up winning some of our processes. I always tell people about 50%-ish of our deals, not just in distribution, obviously, but across the deals that we work on, don't go to the top bidder. They all go to the best fit and the best cultural fit to where the employees and the owners' minds are getting the best opportunities moving forward. And oftentimes saying, hey, we're going to keep you in your buying group. We're not going to switch you. Very rarely do they want to switch supplier lines overnight. I've never seen that. And I think supplier line's an interesting one too, Scott. We haven't sold a Rockwell distributor, for example, but so we don't see a ton of consolidation that's being driven by a particular supplier. But I do think that that's going to be part of our future as well, especially as some of these big guys are getting bigger, that they want to maybe start consolidating their supply chain a little bit. So we haven't seen that in our deals by any stretch of the imagination, but I do think that that'll be part of the future moving forward.
Okay, so speaking of I'm not going to hold you to this. Just give me an idea here. We're a quarter, speaking of the future, we're a quarter of the year into 2024. Get us through December 31st, 2024. What are you seeing on the landscape? What are you seeing on the horizon? Do you think we're kind of trending toward what 2023 looked like? What do you see happening?
Yeah, good question. So overall, from an earnings perspective, most independent distributors and even buyers are budgeting some sort of growth in the mid to high single digits, both top line and bottom line.
Yeah.
So that compared to 2023, and you couple that with interest rates, potentially getting lower later on in the year, should create an environment that is more ripe for M&A activity. And I would say too, Scott, this was particularly obviously because we just sold Blazer. We're working on another one as we speak to hopefully get closed here shortly in the electrical distribution space. But it was almost like a spigot turned on in July or August of last year, where a lot of the sellers who were thinking about selling, but there was so much uncertainty in the marketplace. Uncertainty, not even just bad economic environments, right? Just uncertainty is what will stall M&A activity. We had so much uncertainty in 2023 that by about July or August, a lot of these middle market business owners were saying, okay, this interest rate environment my business didn't go to zero. I didn't get cut in half on the earnings line. And they felt a lot more comfortable calling us, which means the first half of this year, you're already seeing it, but the first half of this year is going to be strong in terms of M&A activity. I have a hunch that there's going to be a whole lot more electrical distribution deals, not just throughout 2024, but even in the first half of this year.
Sure.
I don't know that for sure, but that would be my guess. And I think it's only going to continue as the year goes on and as the interest rate environment gets more favorable for both buyers and sellers.
Going to be fascinating. You need to keep in touch with me. Tell me stuff that's going on. Even if I can't report it right away, I certainly want to know what's happening. David Clark, again, who's the director at ArkMalibu. I can't tell you much. I appreciate you taking a little bit of time out of your day and talking about M&A activity with us on the podcast. Thanks for giving us the insight that we need. I really do appreciate it.
Absolutely, Scott. And again, appreciate you having me on. And I'll be nice. I'll say good luck to your Kansas Jayhawks tonight. Even though I'm rooting for my Bearcats, I will say good luck to your Jayhawks on the hard.
We're conference rivals now. We're conference rivals. So listen, thanks a ton. And folks have questions for me about this podcast or any of our podcasts or things that TED Magazine is doing. Always, there's two ways you can track me down. Give me a phone call, 314-812-5311, or send me an email, scosta, SCOSTA @NEAD.org. Thanks, everybody, for watching, and thanks, everybody, for listening to this Distributed with TED Magazine podcast.